Hi, welcome back. In this week's conversation, we have an interview with my husband, Jorge Cassiano. We're talking about investments, being an investor, investing in the real estate, and investing in the share market. So stick around. And here we are. I've got Jorge Cassiano, my husband, here to talk about investments. First of all, I would like to thank you, George, for being here with us. And I would ask you to do a little introduction of yourself and let us know a little bit more about what you do and who you are.
Hi, my name is George. I'm a business systems analyst. But for the last 20 years as well, I've been an investor mainly in the stock market, and I've delved into a range of products available in the stock market.
Thank you very much. So let's start our conversation by asking you, what makes a good investor?
Well, what makes a good investor? It really depends on your goals. You need to have set goals, whether if you're investing long term, short term, if you're investing in the short term, say for a car, you can create savings by investing in a bank account, but you can also create savings by doing short-term investment in the stock market or trading in the stock market. And you can use a range of products available. It just really depends on your end goal.
And I think maybe your risk factor as well, because there's people that may
your risk factor affects the way you obviously invest. If you're a high risk investor, you're likely to invest in riskier products, but obviously by investing in riskier products there's a chance that your loss could be bigger as well.
Yes, true. So it all depends on a lot of factors. You have to measure a bit where you want to go, set your plan, let's say, and also the risks that you want to take.
Essentially, you got to educate yourself. You got to learn about the products, and then once you feel confident, you can start investing in small amounts.
Yeah, but that education must be there. You really need to be informed. It's not something that you just decide, oh, let's invest and just go and do it. You have to do your research, don't you?
You have to do your research. Most important is the education and the learning that you're gonna, the learning that you're gonna achieve by educating yourself in the types of financial products available that you can trade in the stock exchange.
Because that also will help you with the risks, right? You would, if you are educated, you will be more confident, and therefore you may be able to perhaps go a little bit further and tolerate a little bit more risk, right?
That education basically gives you confidence.
Yes,
and gives you
knowledge.
Confidence in what, basically knowledge is power. So it gives you confidence of the type of investment that you're about to do. Obviously, there's risks with every investment, but it's a controlled risk once you feel very confident.
Yes.
And you can back it up.
Yes. So, you know me for a long time. You know how averse to risks and investing I am because of that fear. I'm basically a non-investor because of that. So what would you recommend for someone like me to fight that fear of risk, that really major fear of risk?
Well, it's really need to, people who have a fear of risk need to educate themselves, need to learn about the different types of products. The way that the stock market works, and obviously as you learn about those, you learn a little bit about how the economy works and so on.
Yes.
The booms and busts, and then you can make decisions based on your risk profile. As I said, there's many products that you can choose, depending on your risk profile. There's a combination of products you can choose overall that fit in different risk profiles.
Yes.
And you can stick to those, and obviously your returns are going to be different.
Of course.
But you need to invest in something that you feel comfortable with, and to mitigate that fear, start with small amounts.
Okay, so what would be the minimum amount that you would recommend, for example, for the stock market?
Well, the minimum amount, if you're talking about straight stocks, the minimum amount if you open a brokerage account is, most brokers have a minimum buy amount of $500 basically.
Okay. Okay.
But you need to be aware that every time you purchase a stock, there's fees involved. So if you're going to do a lot of small purchases, there's a lot of your money going to be eaten up in fees.
In fees.
So
you might consider a little bit a bigger amount, right?
So the strategy is to start small, but
and
gradually build it up. But don't do it in such small amounts that your
costs are gonna eat away.
Yeah, you're gonna pay a lot of fees. So you might initially you can start with $500, and then if you save for 3 months, say you have $3,000, you can buy another $3,000, and then if you know, and so on. So
just go slowly. So let's go and see what types of investments can we actually choose. And let's talk about the first product that we are going to talk about today, which is real estate. I know you like real estate. I know you also invest in real estate. So I would like to start asking you, what's the best aspect of investing in real estate?
Well, obviously, buying a physical asset, people like that. Obviously long term it's got gross potential, you get a rental return as well, but there's obviously downsides to it, which is maintenance costs and insurance and council rates or whatever,
strata
costs, and those are essentially the main factors, obviously, but the capital outlay is quite high to invest in real estate. You've got to be able to obtain loans and so on.
And that end up being a setback, so to speak, because it's not like, for example, the share market that you may start with a small amount. In real estate, you really need to have the capital to invest, or you will need to have a loan, which obviously will incur in costs, and that will be a setback in terms of return. Is that correct?
Obviously, if you're investing in real estate, the location is key. So
of course.
You need to invest somewhere that there's future growth rate. And growth rate, I mean by value of the property. So your maintenance costs, your annual maintenance costs, including any interest you're paying on loans and so on, have to be less than the rental income you're getting, obviously, to get a return on it. And over the long term, your growth rate will help towards that as well. If the property is not growing and you get a decent rental return, then that means you might have to wait a very long time before you get any growth rate out of it.
Yeah, it's basically a long time investment, right?
It's more of a long term investment.
And you won't get quick return
unless you're buying, rundown properties, spending renovation costs, and then flipping that property. But obviously that requires high capital.
High capital, that's what I was going to say now. And what's the major risks involved with investing in real estate?
Obviously, maintenance costs is going to be one of them. Downturn in the property market, interest rates going up on the loans attached to those investment properties, and natural disasters in some areas. That's why the location is critical.
Yes.
So loss of rent.
Bad tenants.
Bad tenants.
The loss of rent.
Property can be vacant for a number of months. The property sometimes might require repairs if there's damage by tenants.
Yes.
And
or even wear and tear. Sometimes
tear,
there's repairs that need to be done, and as a landlord, you should keep your property maintained, because you would also attract better tenants as well, and it's more potential to get it rented and not having it vacant for so long. Is that correct?
That is correct. So the location is crucial. Don't buy property in places where there's no growth rate, there's no infrastructure going in, there's no schools and so on. Your return on that, you'd be waiting for a very, very long time.
And that goes to my next question: how to choose the best property?
Well, again, you need to do the research. It depends on which country you're investing in.
Of course.
And then again goes back to location. You need to spot locations which have good infrastructure or growing infrastructure. They have schools, they have transport.
Yes.
They have jobs nearby. Are preferred locations to locations that have low population, or the population is going down. The infrastructure is crumbling or not being updated. You'll find cheap properties in those places, but unless you know that the infrastructure is coming along, you might have to wait a very long time for a return.
Okay. Yeah. So it's all about, basically, once again, it's all about education and research. You really need to know your location. You really need to know the potential of that location. You really need to know everything about it, like infrastructure, schools, transport, etc. So if in the long run it's going to be a good investment, or if it's going to set you back. Is that correct?
That is correct.
Yeah, I think that's one of the major points here. It's exactly that, is that we really need to do our research, and we really need to study everything about the investment we make, so we can make a better decision. That's what I gathered from your answers. Is that correct?
Yeah, in terms of property investment, you really need to do your research. You can buy research, or you can join certain organizations that you pay for research.
Okay.
That can help you do that. You can work with buyer's agents, and obviously that help you do that.
But that will have a cost as well. It will be a cost associated.
Yes, there is a cost associated, obviously.
So you might consider that as well. There's other forms of investing in real estate as well. You can invest in real estate through the share market. Is that correct?
You can invest in real estate via the share market. Yes, the real estate investment trusts, or REITs as they're known. Those trusts mainly invest in commercial real estate. Commercial real estate has usually higher rents. And those trusts usually invest in commercial buildings, say in a city where there's commercial buildings where there's lots of companies in that building. They lease out the floors. That's the sort of space they invest in.
Why commercial real estate? Is it more profitable?
It tends to have slightly higher returns and has less turnover and the maintenance the maintenance is they usually have maintenance managers on site. Usually those buildings, the maintenance is very good.
Okay, and because, for example, in Australia, in commercial properties, I don't know about other countries, but in Australia, commercial tenants have a little bit more freedom to alter the property, and they also have a bit more responsibility in regards to maintenance. They have to do a bit more than, for example, in residential tenancy, where the tenants are not responsible for maintenance at all, except for obviously the obvious cleaning, etc. And the landlord has to pay basically for any type of maintenance. Would that be a correct statement?
That's one of the differences. But obviously, residential real estate, it's a different ball game to commercial real estate. Commercial real estate, there's a lot more types of properties available for investment. There's doctor's offices, there's warehouses, there's high-rise floors.
Yes.
So, there's agricultural real estate where it's, a warehouse with farmland or things like that. So it really depends, but in terms of investing on the stock market, those REIT trusts, that's the sort of stuff they invest in. That's the sort of trust. Yeah.
Would it be harder to invest in this type of property directly? For example, instead of buying a house, buying a warehouse or office or something and lease it out, would be harder?
It wouldn't be hard, but
maybe more capital needed.
If you need different types of capital depending. If you're gonna buy a small doctor's office, it's probably on par with buying a property.
Okay.
But if you're buying a warehouse and the warehouse is 10,000 square feet, then
it's gonna be way.
The capital outlay you need to be able to purchase that is quite extensive.
I understand. So let's see our next type of investments. And we reached the last type of investment for today, which is the stock market. George, what's the best aspect of investing in the stock market?
Well, the best aspect is obviously you have a lot of products to choose from. You've got a lot of stocks if you're investing in stocks. You can invest per sector. You can invest directly in companies. You can invest in ETFs. You can invest in mutual funds, managed funds.
So there's diversity there.
There's diversity, There's diversity in the product range that you can invest in.
And there's also the fact that you can the initial capital is also lower. You can
start investing with $500, for example. It's pretty easy. All you need is a brokerage account. There's a lot of brokers available in every country, online brokers that you can open an account with and start investing.
Okay, so usually these brokers, usually these accounts are done with the banks, correct?
Banks offer brokerage accounts, but you don't have to go with the bank. There's other providers that are not banks that open brokerage accounts, and also depends on the type of product that you're wanting to trade, obviously.
Okay, so the brokers may specialize in.
There's brokers that only specialize in forex trading.
Okay.
There's other brokers that only specialize in CFDs.
Oh, okay. So there's.
And then there's brokers that specialize in stocks. And then they also let you buy ETFs. Some brokers let you buy managed funds or mutual funds. It depends.
So you might also consider, do a bit of research and see what each broker offers and what type of investment you want to do within the stock market. to choose the right broker and have the right product for you, right?
Yeah, correct. Also, the brokers, they all charge different fees.
Yes.
So if you're gonna become a high volume trader, for example, trading lots of times during the week, then you need to look for a broker that is reasonable in terms of cost.
In terms of cost, so you can lower your cost as well.
So you can lower your cost, yeah.
What's the major risks of investing in the stock market?
Obviously, downturns, booms and busts, and a company going bankrupt, for example, that you invest in.
Yes.
A company losing money, not making profits. Kind of the major risks, economy going bad, that affects the entire stock market, you know.
Yes, like we experiencing at the moment
like
with
COVID. At
COVID.
the moment, economic factors also impact the stock market. What's happening in the rest of the economy, governments and so on. Yeah, it is. I mean, there's a range of factors that people need to take into consideration when they invest.
So basically, we always ended up on the same point, that is education and actually researching and knowing exactly what's available and what suits you best before making the first step towards investment. Correct?
Yeah. You need to do your research and be confident that you can take small steps to start investing gradually.
It's a much better option for someone starting, because you can start small and go from there, rather than, for example, real estate. You have to have a massive amount of money, and it's the capital needs to be there, otherwise there's no investment.
Yeah, you can start small and build it up.
Yeah.
Real estate, you've got to have a lot more capital.
Yeah, exactly. So it's, for someone starting, it might be a bit riskier, but it's a better type of investment for someone starting.
It's I wouldn't say better. It suits a certain type of investor better than other types of investors. Some investors will not touch the stock market.
Okay.
They don't believe in it, and some investors.
Why you think that is?
Will not touch the real estate market because they don't believe in real estate.
Why you think that is? What makes?
It just depends on your risk profile, basically.
Okay, so it's not a question of believing or not believing. It's more of the risk that may be blocking them to be open to those markets. Would that be the case?
It's different factors. People prefer to invest in certain things and not other things. I mean, it's really up to the individual investor,
of course,
and what they feel confident with.
And how do we choose the best shares or the best stock?
Well, obviously you need to do research, educate yourself.
Yes.
Because there's a lot of noise, a lot of misinformation available as well. And you really need to study the company, how it's making its money, how its performance has been in the last couple of years, its likely future performance. Most of the companies, they launch market news. They have, if they listed on the ASX, they inform the market of what's happening.
Yes.
By having news, press releases and so on. So
yeah.
People need to get familiar with those and to start to gain an idea on how to these things work before they actually start investing.
Yes, so it's basically do your homework. You really need to get a good information and know exactly what you're doing. not only to gain more confidence in what you're doing, but also to make better choices.
If you educate yourself, then obviously you're going to feel more confident in investing in these things. And if you've never invested before, then you can start with a small amount, investing in blue chips or ETFs.
Yes.
And so on.
Yes. So it's all, for example, doing making a little parallel between the two types of investment, the two main types of investment that we actually spoke about today. Whereas in real estate, one of the main things is location. You just really need to know your location and study your location. With the share market is more education. You really need to do a study of everything and know exactly all the products, your risk profile, and everything that involves it, in order to know exactly where you're going to invest and do your own plan. Would that be a correct statement, George?
Correct. The research is the key.
Yes. I think it's very important that we actually said this, because it's one of the things that maybe puts people off in the beginning, is that they feel that they are not confident because they don't know enough about the subject, and here that's, you explain it. If you really do your research, that's how you started, probably doing your research, right? You just studied and you started investing, right?
Correct.
Yeah. So it's all about possibilities, and if you really do your research, and if you really study and see all the products and see all the risks involved, it may end up not looking that complicated or that difficult or that scary, because you actually have some information about it. And I think information is the best tool that we could have. Yeah.
Correct. Information is the best tool that you can have, but education is right up there. You really need to educate yourself in terms of the stock market.
Yeah, so true. And that's all for today. I hope you really enjoyed our conversation. Before we go, I will need to say that none of the content of this video should be taken as financial advice. Once George nor me are financial planners or financial advisors, this is solely a conversation with someone that has been investing for more than 20 years and has experience in investment. And this was just a conversation with a few topics, a few things that could actually help someone make a few decisions in regards to investment. However, if you have any questions, if you are not sure of what steps to make in order to start investing, please contact your financial advisor and get professional advice in regards to this, because this video should not be taken as financial advice. I thank you all for watching the videos. Please, if you have any questions, leave your comments below and we will promptly respond to your questions. And share, why not, share with your friends so we make our conversations even bigger. And subscribe the channels and you get a notification of each conversation every week. And that's all for now. Thank you very much for watching. See you next week. Have a good one. Bye. Thank you, George, for being here.
Thank you. Bye.
Bye.